Welcome to the 14th annual Mindset Wealth Look Ahead presentation. My name is Robert Mulrooney, Senior Investment Advisor with IA Private Wealth. I'm joined here with fellow advisors from his house in Comox, British Columbia, Russ Wago. From downtown Vancouver, Mr. Rudy Chung. And from Windsor, Ontario, James Gauthier. Well, every year, I guess it was late February 2020, James flew out to do our Look Ahead conference. And I believe James has done 5 or 6 of these for us. That was very interesting, and what a year 2020 was. But the best way to describe what James does, he's the advisor of the advisors. So every year, James puts on a conference in Toronto for the advisors. And so I'm going to start off a question to James, what the big takeaways this year in January 2021 from the Advisor Look Ahead conference back in January. James?
Yeah, thanks, Rob and Rudy and Russ for having me today. I'm sorry I couldn't be in BC in person. But as you mentioned, I think a couple of the key takeaways from the conference that we held earlier this year, Rob, was number one, that we will see a fairly broad-based recovery, a fairly full recovery of the economy. It's going to happen at different times, depending on geography or depending on sector. But 2020's recession may turn out to be the shortest recession in history. At this point, companies are in very good shape. Individuals, the general public, the consumer, also in very good shape. Savings rates have been extremely high because really there's been a lot less stuff to spend your money on. Plus, there's been a lot of stimulus checks getting written. So people are pretty flush with cash at this point. Those things bode well for an economic recovery. And that's why people were so positive about the direction of the economy. Now, on the other side of the coin, we have seen interest rates start to creep a little bit higher. So a key question will be, what sort of bite will that take out of the economy? And then the other issue is investment opportunities. A lot of prices have been pushed up a fair bit across the board, whether you're talking about stocks or other sorts of investments. So what I'm hearing is that there still are opportunities, but they're becoming a little bit scarcer as the general level of optimism, I think, is fairly built into the market at this point.
Excellent. Thank you. Russ, do you have a question?
Yeah, I do. Thanks, James, for taking the time to do this. And just have a general question about interest rates. You mentioned that, we've seen them rise up a little bit. And, after COVID hit last year, we saw rates slowly kind of decrease down to the lowest levels I think any of us have ever seen in our lifetimes. And recently in February, we did see bond yields jump up fairly dramatically. I'm just wondering if you could speak to some of the impact that that's had on the market and the economy potentially. Thank you.
Yeah, sure, Russ. Happy to answer that one. So interest rates have a pretty profound effect to all sorts of areas of financial markets and the economy. Usually when interest rates go up, asset prices typically go down. It's going to impact different sorts of assets differently. But I think for your average consumer, your average Canadian, what's happening with interest rates is going to be most impactful in terms of what's happening with their mortgage situation. So, you go to a bank and you're applying for a mortgage. Generally, you're going to be asked whether you want a fixed rate mortgage or a floating rate mortgage. When you're dealing with a fixed rate mortgage, and assuming you're talking about a 5-year mortgage, that's going to be linked to the 5-year Government of Canada bond yield. So you mentioned that bond yields have been going up further out on the curve. 5-10 years have been rising. That's going to result directly in higher rates for your mortgage when you're going to borrow from the bank, which obviously is going to have a direct impact on just the average Canadian. When you're talking about a floating rate sort of mortgage, that's going to be tied more into, or will be tied to, the bank's prime rate or the Bank of Canada overnight lending rate. That's basically been at zero since the COVID situation first came last year. And it's likely to not move anytime soon, but we're not here to forecast rates. But certainly the realities of people's mortgage situations is directly impacted by the rate environment.
That's excellent, James. We get a lot of questions on that, and certainly we would advise our clients to, and we refer to lots of different mortgage brokers. But maybe we can talk about our own situations, what we're doing, because people will say, well, what are you doing? Because it is it's a tough situation, right? What are you going to do? Are you going to lock? Are you going to be variable? So maybe just around the table, Russ, why don't you start?
Yeah, well, my mortgage came due actually last year, right at the beginning of 2020. It was early January. It came due, and what I did was I locked it in for 5 years. I looked at interest rates and looked at the economy, and I thought things were going to improve and the interest rates were going to move up. So I made a decision to lock it in for 5 years, and I look back now at that decision, and perhaps that wasn't really the best timing, but sometimes in life you have good timing and sometimes you don't. So you can never go back and change what you do. You can just keep looking forward.
Vancouver, British Columbia, Rudy Chung.
Yeah, living in Vancouver, I call Vancouver the resort that thinks it's a city. Everyone here bears the weight of very large mortgages, and it's a very impactful. The interest rates are a big deal to people in Vancouver. And for myself, I was managed to renegotiate my mortgage and bring my interest rate down from 3.64 to 1.6, which is very low. And this is available to all clients. Really, you can take a look at refinancing your mortgage. You can take the extra capital, savings, and interest, top up your RSPs. The refund you're going to get can go back into an RESP, and then you get a grant for that money too. So the money gets recycled quite easily, and that's just planning. And that's something we're able to help most clients with.
Yeah, in my situation, fortunate enough to have a very low mortgage, and I was looking at actually refinancing and maybe getting a top tick, because I think the last time my house was appraised was back in 2007, and it has changed significantly. So I was thinking about that and talking it over with Victoria, and we may or may not do that, but I was looking at a 10-year. And a 10-year, I think I was quoted at just over 3%, which is pretty good 10-year money, but all the real estate investors will always tell you you should float and pay down as you go. I often bring up interest rates with clients, and I talk about my dad being a businessman. I mean, he never borrowed below 8%, and the business people on this call will probably never borrow above, call it 6%. And just the difference, knock on wood, the difference time makes. Rudy, you have the next question.
Thanks, Robert. Russ, Robert, and myself, we went through a lot of phone calls and a lot of meetings over the last 12 months in our business. And what I've noticed is a very big swing in investor behavior. 12 months almost to the day, we were in the thick of things where there was a lot of despair and depression about what was going on with the markets and investments. And people were very fearful, and they didn't really want to do the right thing, which is to invest versus maybe get out of the markets. Jump ahead 12 months later, and we've seen it swing completely to the other side, where we're seeing a lot of greed creeping into the system, where things like cryptocurrency, cannabis, even Vancouver real estate. The bidding wars are back in the city, and people are paying. We had a client who put an offer in the other day, and they had 100 offers for the same property, and it ended up selling for $500,000 over asking. So I wanted to ask James if he could provide a little bit of insight on what has really changed in the investor mindset in the last 12 months.
Well, put yourself in Rudy's shoes from a year ago. The market was going through a pretty calamitous time, all sorts of uncertainty around the pandemic, around what COVID actually meant. So there was just a tremendous amount of fear and uncertainty, and fear and uncertainty are not a good. These aren't good things for the market as you moved into the summertime. But there wasn't much hope in terms of timing of a vaccine, but development was underway, and people realized, okay, the end of the world is not upon us. You fast forward to then November, you actually got, bang, the good news, you call it Pfizer Monday, when we did see the U.S. approve the first drug, and then there were subsequent drugs approved thereafter. By that point, the recession was long since over, and investors finally keyed into the idea that, okay, we're going to see a recovery. And not only are we going to see a recovery, we've got a situation where consumer savings rates are at an all-time high. People are flush with cash, as I said earlier. They've been sitting at home, and there's going to be one heck of a consumer spend once this is all over. Now, maybe that's led to a little bit of euphoria in certain parts of the market. You mentioned real estate, and I'm not here to suggest that the real estate market is in a state of euphoria, but you've got record low interest rates combined with consumer balance sheets that are very strong, combined with limited supply, and there you have it. You've got all sorts of conditions to lead to a very, very strong real estate market for sure.
Yeah, I think that brings up 2 points, and I'm often talking to clients and about what their children should do, and they'll never form a house, and they're doing this. In March of last year, we saw panic selling. So not many of our clients, maybe 1 or 2, panic selling, and now we might see, especially in that reference where there's 100 offers, panic buying, and they both can be bad. Certainly, panic selling is horrible, and we've seen that in 08 and again last March. But panic buying, I haven't seen since kind of 1999 with Nortel at $120 or whatever it was, and I have to own it. So yeah, that's kind of our take on that. So we've all been in the business over 20 years. We celebrated our 25th anniversary last year. Not much of a celebration. You telling us you've been over 20 years in the industry. Tell us your favorite investment quote, and maybe I'll go with Russ, Rudy, James, and then myself.
Hey, thanks, Rob. Yeah, I went and I've got quite a few quotes that I really like, but I decided to choose one that relates a little bit to my decision to lock in my mortgage last year, and it's from Warren Buffett, and it goes, "In the business world, the rear view mirror is always clearer than the windshield," and I think that makes a lot of sense when you're investing. You look at conditions today. You make your decisions, you make the best decisions, and you know what, in a week or 2 weeks or a month or a year, things change a lot. So you always try to make the best decision at the time, and you got to remember you're looking forward when you're doing that. So it's a heck of a lot easier when you look back at what you've done.
I looked at that one. That's excellent. Buffett's got so many. Rudy?
I was going to use a Wall Street quote, but not a lot of them are client friendly. So I think I'm going to go with a classic quote. There's a fella in our industry. His name is Matthew Newman. He's an American investment professional, and he was struck with brain cancer many years ago, and it's really changed his perspective on life as a survivor. He wrote a fabulous book called Starting at the Finish Line, which I highly recommend people take a look at. But he had a great quote that it stuck with me, and it applies not just to investing in the markets, which I think it's very applicable, but it also applies to all the challenges that we have in life. He said, not all storms come to disrupt your life. Some actually come to clear the path. And I think sometimes when you go through things like the pandemic, it really helps you sort out your priorities from an investment point of view, but your life priorities as well.
Yeah, I like that one, Rudy. So I'm going to take another one from Buffett, who, of course, is maybe the king of business and financial quotes. But his quote in this case is, "Forecasts may tell you a great deal about the forecaster. They tell you nothing about the future." I like this one because clearly that implies that Buffett doesn't see much value in people's prognostications. Yet you watch the financial media, it's littered with people just making predictions about this, that, or the other thing. So I think the key for financial success and financial health is a plan, and ensuring that you stick to that plan rather than just guessing as to where things are going to go and hoping for the best.
Well, you guys have used 2 Buffett quotes. I also had a Buffett quote, so I'm going to go in the theme of St. Patrick's Day and go with Peter Lynch, which is famed fund manager, and he's an Irish guy. Did you want to look at a company that an idiot could run? Because eventually they may be running the company. And Buffett often uses that one as well. But maybe on St. Patrick's Day, James, because this, this might be a good Buffett quote. It takes 20 years to develop a good reputation, and it takes 5 minutes to ruin it. So be careful on St. Patrick's Day. That's a good one. Now, just before I send it to Rudy, James, again, 5 or 6 times coming out. This is the, let's say, 7 times doing this look ahead presentation for us. We really appreciate the time and the work that you put in. I really like your research. It benefits our team and Mindset Wealth. And I'm going to turn it over to Rudy to close off this year's 14th annual look ahead presentation. I'm looking forward to next February up at Crown Isle, being in person with, like I said, 50 or 60 clients and friends would be the 15th look ahead. Rudy?
Thanks, Rob, and thanks for everyone for joining us on this call. We spend a lot of time talking about the mechanics of our business and investing, but really the roots of what we do, and that's why we're called Mindset Wealth, is the way you think about things. And I'll use a great example. I mean, if I had a crystal ball in December 2019, and I sat you down and I told you exactly what was going to happen in the next 12 months, a global pandemic like we've never seen before, millions of lives lost, global economic shutdown, massive market hysteria, and massive political uncertainty in the world's most powerful country south of the border. I'm pretty sure 100% of a rational investor would say there's no way I would invest in 2020. I would just go to cash and not lose any money. When we jump ahead into the real life world, and I'm pretty sure every client who's seen their statement at the end of 2020 was pretty happy. So the lesson there is to say it's never ever about what the markets do. It's about what you do. And we bring clients and we advise them along the path to keep the emotion of the process. Your mindset is something that we focus on, and if you can control your mindset changes your behavior, and your behavior ultimately changes your results.